speaking out of Wall Street. The market is open and it's not looking good.
The Dow is down. You see it more than 300 points in early trading. This comes as oil prices fall below $30 a barrel. Also, there is still a lot of anxiety over China's slowing market. Chief strategist from Bell Point Asset Management, David Nelson, joins us by phone. David, thanks for being with us. So here we are once again watching the market. Some people would say this is just a blip and not to worry. Others might say, look, the problem is there have been a lot of blips here in 2016. It's only January and this doesn't seem to bode well. What do you say?
The last rhetoric, that seems to ring true. We're getting a whole series of data points here that are just pretty troubling. I can't point to any one thing, as the sole catalyst for today's sell-off. We had a pretty nice bounce off of yesterday's open. That was pretty, that was really nice, but it was a technical in nature. Probably the bad news probably started last night with Intel. Disappointing numbers coming out of Intel, especially in some of the bright areas, some of their growth areas like data centers. And then you spill over to China, their data was weak. And now you're seeing oil, trade and start to live below $30 a barrel. And I know that feels good when you go up to the pump and you're filling up your gas tank and you're paying a lot less for it. But if you're living in one of those energy-producing states here in the United States, you're starting to feel the pain here. So there's a whole series of events that are kind of colliding, creating a perfect storm, at least for today's open.
Well, Houston has definitely been feeling that pain. David, we keep talking about that. If you're investing in the stock market, it's more about the long road and not a day-to-day basis. So, what are you telling investors as we are looking at the markets right now?
It's hard to have the long-term picture when you wake up in the morning and you're looking at a market like this, and then later in the day and you start to look at your 401k. First thing that you should do with your retirement assets, you've got to be positioned correctly to weather a storm like this. If you're approaching retirement and you've got all your money in stocks, you're really doing something wrong here. You're causing some real damage. You need to rethink that. If you're 20 to 25 and you see something like this, it's just a blip in the road. You're going to just keep pouring money in the market. You need to have some kind of diversification, and those are big words, and it sounds good. Look, I feel the pain. We go through this each and every day, managing assets, and it has a bunker mentality right now. It feels like we're all in a foxhole, weathering this storm. We will come out of the other side of this, but we're still testing the bottom here, and we're just not there yet.